Ladies and gentlemen, welcome to a new episode of the Fintech Hunting Podcast. We have an incredible guest for you today. He's an industry thought leader and an origination powerhouse. He's a technology evangelist. Please help me welcome back to the show Jim Morin, mortgage owner of All Points Mortgage. Jim, welcome to the show.
Mike, thank you for having me, and I'm glad to be here. Listen, I think I say this every single time I'm on. I need you to follow me around every time I do a presentation, every time getting on stage. I need to have my hype guy with me each and every time.
Well, I'm a big believer in you. You and I have been on a lot of panels. We've been on different boards together. We've been in focus groups over the years. And one thing I greatly appreciate is you always have a wealth of knowledge. So couldn't be more excited to have you back on the show. Let's do a quick recap of kind of where is the mortgage market right now. People are talking about rates. Are they going to go up? Are they going to go down? Is there going to be a rate cut? Where do you think the mortgage industry is right now, and where should originators be focusing?
I mean, I think there's been this pivot to purchase. We've probably talked about that. Multiple people have probably used that same exact phrase quite a bit over the last couple of years, but where interest rates are, right? There's not a lot of refinances going around. So we're still going to do multi-trillion dollars worth of mortgages, but there's this added focus and push on the purchase side. And depending on which market you're in, I would say interest rates almost play less of a factor than inventory, because we have this inventory issue in some areas, and not in every marketplace, but certainly in lots of them across the country. So I think inventory is playing a bigger role than interest rates right now, because even when interest rates are, whether they're in the high sixes, sevens, some of these non-QM loans and some of these other things we're doing are well into the eights and nines. I think it's evident that there's buyers out there. It's just we're still lacking the inventory. So I think the mortgage space right now is certainly about where are you on the purchase side of things, and what have you done to either develop relationships, be integrated. I mean, the name of the game is certainly how are you sourcing business. And so for the folks that were in lead generation or doing a lot of refinances, is how can you adequately pivot to that purchase side of things and develop relationships? Or have you been smart enough to sort of crack the code on purchase leads?
Awesome. You've brought up a lot of topics that I'm going to dive into. The first one, all right, so we have an inventory problem. As an originator, how do you then sell and counsel your borrowers in a market that has very low inventory when they're looking to get their home of their dreams and everything like that? What are the suggestions and the advice that you would typically provide?
I think that's where the originators are making their sort of hay, right? I mean, we pay loan originators so much in loan commissions. It's like this is how you differentiate yourself in a world where everyone is essentially trying to make you a commodity, right? And pushing buttons and getting loans and automation to take everything away. It's like, no, this is how you really become a differentiator and how you can counsel consumers and those real estate agents, those referral partners of how can we win transactions together? How can you win this bid? How can you make your offer be seen? How can you use some tricks of the trade to sort of use your financing options to your advantage to help you win those deals? And again, everything goes back to your partnership with the real estate agents. How do you then relay that information and let them know that, hey, sending mortgages to any of my loan officers at All Points Mortgage is the way to go, because we're going to truly counsel these buyers and borrowers through the transaction to help them win as many transactions as they possibly can.
Couldn't agree with you more. I think that counseling is critical. And I think one of the challenges is a number of loan officers, especially in the refi boom, the COVID years, really didn't refine and fine tune their sales skills, right? I mean, if you were in the mortgage industry and you were breathing, you could write a lot of loans. And I don't mean that to disparage anyone, but with rates being as low as they were, it was easy. Now, what I see is a lot of people have lost the art of good discovery, of really finding out, Jim, why are you looking for a mortgage? Are you looking to upsize? Are you looking to downsize? Talk to me about your current financial situation. What are some of the things that you counsel your LOs with about how to do better discovery so that they become that trusted advisor instead of somebody hawking a mortgage?
I think that's a valid point, and you're exactly right. I mean, that's what we're spending the time teaching and reteaching, right? None of these things are brand new. These are tried and true practices. I think you hit the nail on the head. COVID was certainly a time frame where loan originators became order takers, right? And we have to get
Yep.
away from that. And I'm the biggest advocate of technology and using things to be more efficient and more effective. But you got to do it in the right way, right? Part of what you're talking about to me has come from our adoption of technology. Just remember, we're not very far away from the days where we were taking applications in person and we were doing them on pen and paper. And that's where all that discovery was taking place, Mike. If you talk to any loan officers when they were doing it, that's how you were creating rapport. That's where you were doing those discovery questions. That's where you were really trying to find out what was the best option for the consumers, what was going to help that family be the best scenario. And with automation and online applications, borrowers are filling out their own information, right? So loan officers have to just do it at a different part of or a different phase of the process, right? Before you might have been doing it at the kitchen table. You don't just want to take what they're putting in your online application or point of sale or where however these other companies are doing it and just take their word as is. You have to go back through one, you have to validate what they're putting in the system.
Yep.
Two, you have to then go ask the additional questions to do just what you were talking about with the discovery phase, which I think is lost a lot because most people are just filling out online applications. Loan originators are quickly pushing them over to their loan officer assistants. Loan officer assistants are scrubbing and putting things in. And I think the exact point in the question you asked is where are we doing that discovery phase? And I think that's what we're spending a lot of time talking to the loan officers about is how do we get back to basics? It's not sexy, but back to basics has been the rule of thumb since post-COVID.
Well, and when you do, what I find is when you do discovery right, it helps build and foster the relationship. And you made a really good point that with technology, a lot of times loan officers are entering the home buying process at a different stage. And I
Correct.
think some loan officers have been very slow to pivot and react to that. And they think that, oh, now that I got an app, let's just send it to the LOA. Well, if you didn't talk to the person, if you didn't build a relationship, if you don't understand their why, if you didn't do that discovery,
100%.
they're very easily going to jump on a different rate, someone else doing something, and then you started talking technology. I want to dive in. We're on the Fintech Hunting podcast. You're a technology evangelist. I love talking tech with you. But one of the things that I'm really fascinated of we've got all this new technology, all this cool stuff, and the cost to originate a loan continues to rise.
Yeah.
Profitability continues to drop. So where is that point of diminishing returns with all of this technology and just chasing the shiny object to saying, here's all that we need and here's what we can afford and here's what we should use? Give me some perspective on that.
So I think that's a challenge, right? And I think one of the challenge for all of us that are running or owning mortgage companies is how do we get that cost of origination down, right? And we want to, I mentioned before, sourcing business is the name of the game. I mean, we have to generate business. So we want to be spending more time, effort, energy, and money on originating and getting loans in the door and not so much on the cost of origination on all these things. And I think there's a sweet spot there. I mean, you could get lost in demos and with this new transition I've been going through, listen, there's lots of shiny objects everywhere. And it's how do we really differentiate all of these tools and services to say, how do these fit together? How is this going to work in my process? What do I need? What's overkill? How can I be as lean and mean as possible? But there are some basic instruments that you need to be able to do, right? I mean, you can't, I joked in the last question about taking applications with pen and paper at the kitchen table. I mean, let's be honest, there's that discovery phase, but you still got to take care of, you got to have a right point of sale. You just need to slide your discovery phase down a little bit and do it in a slightly different way. But you need a point of sale. You need the right LOS system. You need an automated marketing engine of some sorts, right? You need a way to stay in contact with all these people. So I think the sweet spot, because I would love to buy it all. I mean, you
Right.
know me, it's I want to buy it all, but you can't. You really got to piece together a few different things, but keep your eyes and ears constantly open. And I think that's where um, the trade shows or the amount of demos, and people are getting more and more sophisticated with how they've come to market. So I think it's a challenge, but also the exciting part because you get to see all these new shiny objects and how you can deploy them in a smarter, brighter, more efficient way. I think is what's really been helping me. I would say that, right?
Okay.
Because I have a clean
Yep.
slate, so I can build everything from scratch. I don't have any legacy problems, don't have any legacy issues, and it's been somewhat refreshing to see how many tools some that are out there made for loan originators on the broker side of things, right?
Yep.
And it's allowing us to be lean and mean and to run our shop as efficient as possible without having any legacy problems, issues, and we can do things um, efficiently. And like I said, lean and mean is the name of the game right now because we're able to offer better interest rates and products and terms because we don't have this tremendous amount of overhead like I had at past companies and organizations before.
So let's dive into that a little bit more because I love the point you made about you can start with a clean slate. So you don't have legacy systems. You don't have people saying, this is the system I've got to use. I mean, I think it's crazy. There's lenders that have 4, 5, 6 LOSs, 3, 4 point of sales, 2, 3 CRMs, and then they wonder why their cost to originate is too high. But let's dive in because I think one of the challenges, and I want to get your expert opinion on this, is there's a lot of overlap in technology that people don't fully realize. Let's say you have a CRM and then somebody shows you a really cool tool to nurture your past closed loans. Cool tool, maybe they've taken it to a new level, but at the end of the day, your current CRM can do nurturing. You may have to do a little bit of work. So, how do you draw that line of do I want that next shiny object and it's got some overlap because it does these couple of things really cool? Or do I add on to what I currently have and now I only have 3, 4, 5 system? How do you start vetting that? What's the mindset? So if I'm a tech vendor listening to this and saying, man, I just heard Jim talk about how they vet technology. Talk to me how you vet technology, especially from the broker perspective now, and then we'll get into some of the cool tools that you're using.
Yep. And I think that's a challenge in and of itself. A lot of times, I mean, the typical names that you would know in our space um, are automated marketing engines more than their true, tried and true CRMs, right? They all
Yep.
have CRM components to it. But one of the things that I'm finding is I'm using a lot more automation. Some of our lead management and trying to get leads and getting in front of some of the things have nothing to do with the mortgage space, right? We're using social media, we're using online, we're using our landing pages. So when I start mentioning some of my CRM tools, the folks that I'm consulting with that are not mortgage, right? They're automation, they're my funnel guys, they're my lead automation inbound marketing. They don't know some of the names that we all know in the mortgage space because these are mortgage specific for the most part, automated marketing engines or technology tools where they want to push CRMs that are agnostic of mortgage space, right? So that's the question is, as I'm starting, should I stick with some of the mortgage specific ones that I have and some of the campaigns I've already built out, or do I transition over to something that's going to have be a more powerful CRM tool, but doesn't have a lot of the real mortgage assets built into it? So that's actually a process I'm going through right now
Oh,
because it's, hey, how much do and that's where just going through the process in and of that is, do I really look at some of these big tech vendors or do I stay in my lane and do something that's more mortgage specific? And going through that vetting process has been a interesting one and a challenge. I'm still going through that right now to be
So
honest.
I got more questions for you on this. This is
Yeah, you got it.
fascinating for
Yeah.
me. So as you're going through that, let's just use, whether it's marketing automation or CRM, because that's the example you brought up.
Yep.
You can go with a mortgage specific solution and it's got a
Yep.
lot of the content, right? It,
Yep.
it, it knows a good faith estimate. It knows how to go to a purchase transaction. It knows how to go to a VA loan. And it's probably got some content that's already built in. But it may be a lot harder for you to change the templates. It may be harder for you to schedule different triggers. It may not have as robust CRM functions.
Yep.
Does that take less of an importance now with the advent of AI? And here's what I mean by that. You see some industry agnostic tools that with 2 or 3 clicks, like a Canva for marketing stuff or something else where I can very easily go in and create workflows, a Bucket.io I use for different tools and funnels. Do you
Yep.
use tools that make it a lot easier for you to do that because you have AI who could build out the marketing content? Or is that just crazy thinking?
No, I mean that's what I'm going through right now, right? And that's the beautiful part of being agile and nimble, and because I can do these things. And the real answer is I'm going to continue to innovate. I think one of the places
Right?
where we talked about back to the applications at the dinner table, and we think that we've completely revolutionized our mortgage industry by having some tools and processes, but we're probably what, maybe halfway there. I mean, Mike, there's
Right.
still so much further where we need to go from an innovation perspective. So I want to be on the forefront of that. And it's battling those things back and forth. Yeah, I mean, listen, before it was super important to go with a mortgage specific company because there was libraries and there were databases and the assets were already built in. I can get assets now and use some of these AI tools and then use something like Canva to create assets where now I could have a much more powerful CRM system or database that I want to build out and go that way. So I'm constantly tinkering back and forth. And that's really some of the questions I'm weighing right now of, do I truly need to stay in the mortgage lane or should I go outside and create some of these assets and campaigns? On the mortgage side, best practices, right? Sometimes they're
Right.
rolling things out. It's not like I want to reinvent the wheel, so I don't want to reinvent the wheel, and it's this battling back and forth. So I've been open to all the discussions and are vetting all those companies right now, specific on our space. But in the meantime, we're still using um, Surefire, which is what was our legacy sort of system
Okay.
rolled over from the previous company. And we're using another that everyone probably knows. Bonzo is another one that does some of the certain things that I'm doing. But I'm in the middle of making some changes and tweaks to that because I really think that um, we need to come up with a better, more efficient way of how we handle and keep in touch and communicate to buyers along or borrowers along their consumer journey.
Well, and I think it's about building those relationships instead of just treating them as a transaction. And
Correct.
so automation, if used properly, can help enhance that. And if
Yep.
used the wrong way, then it only magnifies that it's a transaction. You're not going to get any additional business from those people, let alone different
Yep.
referrals. One other topic that you had mentioned, I want to make sure we dive into this for a second, is the importance of generating business in today's market is critical. And you
Absolutely.
mentioned social media, you mentioned video, you mentioned those tools. So talk to me about the importance of social media and how do you leverage video? When do you use video? When don't you use video? How do you help your loan officers distinguish that you can do video very successfully and not always have to talk about mortgage to grow
Yep.
your mortgage business? So give me
Valid.
some of those insights.
And I think that's one of the tricky things. One, you get most loan originators, which is hilarious that most of them love to hear themselves speak, but somehow don't like to record it or put it on video, right? So I think showing up is half the battle. I think
Yep.
knowing that just hitting record and putting something out there, authenticity, I think is paramount. Um, and I think that's half the battle. But then it's how do you utilize all these tools and resources? I mean, social media should be in video should be an additional tool. And I think a lot of people try to hide behind it. They think if they just post something or they do it every now and then, um, it's what's going to do the job. It should just supplement your other activities. I mean, the honest answer, I said back to basics. It's hard work, determination. It's all these things that people want to avoid. People don't want to work very hard. I mean, this idea of picking up the phone still works really, really well, especially because no one's doing it now, right?
Right.
So you got to be able to pick up the phone still. You still got to be able to make text messages, but you have to be doing video. I mean, if you're going to be doing it, if you're going to be posting, I don't want to take this and make this a social media thing, but the algorithms and all the other places, you got to get comfortable meeting people where they want to be, right? That's the idea and
I think
concept.
that's
And you
key.
got to be a chameleon to a certain speak. If you're working with one consumer or one borrower and all of the technology makes them feel uncomfortable, well, then you can be old school and you can either meet them face to face or you can have regular phone conversations. But if someone wants to text or they want video updates, you got to use some of the tools and technology to be able to communicate with people the way they want to be communicated to.
And I think people have to realize that when you're using video, when you're using social, you have to get the borrower earlier on in the funnel. There is a whole generation out there that is getting their mortgage advice from Instagram and TikTok and everything else. And by the time they go to originate, they already know who the originator is that they want because they've seen 30, 40, 50, 60 of their videos. And it wasn't, I got another 5-star review or I've got the best rates. It's they can relate to that person because the person talks about other interests in their life, how they like baseball or football or gardening or photography, or they have kids in their kids group. And then they find a way to weave in their mortgage and mortgage expertise because it makes them much more relatable. You've said this numerous times in meetings I've been with you. People buy from people they know, they like, and they trust.
Yeah, that's the adage, right? People are going to do business with people they know, like, and trust. And whatever that may be, you have a Notre Dame shirt on, Notre Dame football behind you. If I'm a Notre Dame alum or a diehard fan, we might be doing business. I might be buying something from you just because you're a Notre Dame fan. And I wouldn't know that if you didn't wear the shirt or you didn't put it out
Right.
there or
Or
didn't
have
know the
something behind you. Yes, I couldn't agree more, Jim. You and I can keep talking forever. But
Yeah.
before we end, I want to hear about All Points Mortgage. Tell me about this new venture that you have. You've got this clean slate. You're building a powerhouse team. Talk to us about it and make sure you include how people can find out how to talk to you or one of the other team members at All Point Mortgage.
Yeah. I mean, you hit the nail on the head, right? Clean slate. So I'm able to take all of the thoughts in the thought leader process and implement a systems and technology that can allow us to be lean and mean. We can offer the best rates. Being on the broker side of things, we have increased flexibility, products, programs, whatever's out there we can offer. But again, we can keep everything affordable for our consumers and sort of give them that big box feeling of an experience, but keeping everything affordable for them. So it's the combination of two. But yeah, I'm growing, building out, trying to hire and recruit all my loan officers, which is why this thing is exciting and new, but is sort of old hat because this is what
Right.
I've been doing for the better part of 25 years. It's just exciting to have something that is my own now versus leading and growing other people's companies. So tools, technology, we're still vetting some of these, but been a breath of fresh air to see what these wholesale lenders have to offer from tools and technology for their partners. Automated marketing systems built for smaller broker shops or one-off type of scenarios that we can do. So it's been a fresh breath air. LOS systems, right? What LOS systems? I mean, I was on Ellie Mae and Ice, and not to take anything away from them, but it's been refreshing to not have to deal with some of the latency issues and other things and have a web-friendly mobile LOS system and point of sale that my loan officers can log into from anywhere whenever they need to. So Lots of tools, lots of technology on this side, and we're just getting started and trying to build out all of the pieces of the puzzle as we keep going through.
If people want to find out the different areas and regions that you're recruiting for, if they're interested in getting a loan from you or just want to talk tech,
Yeah,
what's the best way they can get a hold of
I
you?
was gonna say, I don't know how much you get into post-production if you want to drop my contact information, but listen, my cell phone number is 203-509-3958. You can text me anytime. My email address is Jim, just Jim, at allpointsmortgagellc.com. So all points mortgage just spelled out, Jim at allpointsmortgage.com. Like Mike said, I'm a mortgage junkie. So if any of you guys just want to talk shop, talk systems, talk or hear a little bit more about how I've been piecing some of my automation things together on the backside, feel free, reach out. I would love to talk to you guys.
Jim, I can't thank you enough for being a guest on this episode of the Fintech Hunting Podcast.
You got it, Mike. Always welcome.